Vincent has also helped his clients get approved for millions of dollars in credit and real estate holdings, and is teaching people to dream big and realize those dreams through fiscal responsibility and strong credit management. Hey, it's really great to have you on here, Vince. I know you have your BA in Management and Information Systems and your MA in Computer Resources and Information Management, and is a Microsoft certified engineer. That is incredible. Over 20 years of service to our community and to our veterans. How are you doing?
Doing great. Thank you for such a great introduction.
Sure.
Yeah, thank you.
Yeah, you make me want to start building my credit right about right now.
Yeah. Well, now's a great time.
Right.
I can tell you
great
that.
Time. Yes. Yeah. So tell us something about your services. What do you offer people?
Yeah. Well, first I'm going to start off by the website is webuildyourcredit.com.
Yes. Okay.
And then I'll give you the numbers 312-971-1357.
Mm-hmm.
And we have a private office, but just due to COVID, it's best to call in, and we can give you a one-time assessment to detail a credit plan to help you reach your goals.
Okay.
And so what that is many people, they have goals. They want a home, vehicles, line of credit, want to become investors. And so what this customized program does, we come in, look at repair elements. So we can't expect everyone to be perfect. So there may be things that we need to repair. But then we have trade lines. Trade lines are like enhancements that we can add to your credit. You know, we have people that have great credit that's willing to partner with us to help you. Then we use building techniques. Again, we have lenders that we know even if you've had problems, you can get with them and start building back, start gaining new credit.
Oh, okay.
Yeah, and so with all those elements all put together, we should be able to see significant improvements in your credit. Typically, we can see 50 to 100 points in a 90 to 120-day period.
50 to 90, wow.
Yes, using this strategy.
Mm-hmm.
Now, pardon me?
No, so what do you think? What is the thing that people have most of the problems with? Because is it that people are not financially literate or need to learn the financial literacy lingo? Because many times people come in, I guess, with bad credit because they didn't know what to do, right? And have never been taught that kind of thing.
Right. Well, I think that's one thing. You know, is not understanding the requirements of the lender, monthly payments, and all those types of things. But one of the biggest things that I see is maintaining credit. Lenders love longer relationships, having credit. So a lot of times people think they can get maybe just a car or one credit card and that's enough. No, lenders like to see the diversity in credit, 3 or 4 credit cards, car loan, home loan. And my clients in a minute will ask me, well, I got to build debt so that these lenders will like me. Well, in essence, yes. You got to establish some debt for other bankers to trust you with money. Just that simple.
Right. Yeah, that makes sense.
Business. Mm-hmm. The lenders are in the business to make money. Now, sure, interest rates go from, there's different tiers of interest rates you can pay, all the way from great credit, paying low interest rates, to so-so credit with higher interest rates. But no matter what the formula is, your best position is to start establishing credit. That's it.
Mm-hmm. How early should someone start doing that? Do you think the earlier the better, or do people have problems when they're older and they come to you? Let's say they're in their 40s, 50s, 60s, 70s. Does it vary in what they have to do to establish that credit?
Something, I have a term for that. Like if you come in at 45 years old, and one line of credit, I'll call you a baby.
Okay.
Like, I'm a baby. Yes, you're a baby with credit, because if you just got one trade line, maybe one credit card, one car loan or something like that, in lenders' eyes, you are a baby with credit, because there's rankings. So from 0 accounts to about 8 accounts, you still a baby with credit. So that includes credit cards, lines of credit, vehicle loans, home loans, all the way up to 8 accounts, you still a baby. From 8 to about, still a baby, yeah. Now, you just won't be trusted the way you want to be trusted to live your life, you know? And so from 8 to about 13 accounts, you're considered like a teenager. You're getting more accustomed to credit. Over 13 accounts, now you're an adult with credit.
Huh.
And so a younger citizen, I would say from 18 years old, they need to start establishing credit, not just being an authorized user on their parents' credit or uncle's credit or whatever, but having their own credit. You know, matter of fact, we have programs that we know certain lenders will approve people, even with thinner credit, bad credit, no credit, all these formulas to get people on track. And many times, people can qualify just by having credit.
Okay.
Yeah, I see so many situations where in our community and different communities, we have very little credit, you know, and we may have a decent score, say 650, 700 credit, but only one trade line, which means one credit card or one auto loan. When it comes out to lenders, they still don't trust them very much because it's not showing a good track record. Right. Or the diversity into being able to pay different accounts.
That makes sense. And then you also have to have some fiscal responsibility, because I know that was part of, what your firm does is to actually, make sure that people are fiscally responsible as well. So when you're young, sometimes you can get that card and it doesn't say Maserati on the top of it. So you got to be careful about what you're trying to put on your card, right?
You're right. You're right. Especially our young citizens, they want the best out of life,
Right.
With the best interest rates and all that.
Yeah.
But again, the principles still stay the same. They need to establish and maintain good payment principles. Yes. That means understanding what the lenders want every month. And the thing about it, one thing that is essential that I see in a lot of young people, like they'll get a credit card since they're just starting off, $300, right?
Right.
So $300, they look at it and say, oh, that's no money, and let it go. Let it default. It's one of the worst things you can do.
Yes.
Because that $300 is the link to getting $3,000 by paying on time. It's the link to getting $30,000 just by paying it on time, because other lenders look at how you manage that little bitty account.
And it sounds like maybe the lenders too are looking at this, right? And they're saying, well, if you're a young person, then I'm going to see how you do. So I'm going to give you $300 and see how you can do. And if you're really defaulting on that and not doing the things that you're supposed to do, that gives them an indication of how you're going to manage money in the future, right?
Absolutely. Now, again, we are referring to younger citizens with this model, but it's still applicable no matter what age range you are. So if you come in at 45 just getting started, the same principles apply. They're looking at 12 months of good, perfect payment history as far as managing, 24 months, 36 months. 48 months. That's what they're looking at, no matter what age range you fall into.
Yeah.
This could be that same principle can apply even for citizens that have done bankruptcy and trying to build back into society again.
Yes, yeah. And then what about things, I've been hearing this a lot, is about people are trying to consolidate their loans. And now we have people who are coming out of school with, increased debt, and the amount of money that they have to pay for a college education now is so high. So young people coming out, even people who are older, sometimes carrying these debts for academic scholarships and things like that they had to or loans that they had to obtain. So what about consolidation of debt and people trying to make sure that they're able to pay that particular amount of money?
Okay, when you talk, just speaking of two things, debt consolidation could be you got a lot of credit card debt and you're trying to consolidate, right? You built that up. Or you have a lot of student loan debt and you're trying to consolidate. Right. Now when I talk about student loans, it's just such a wild thing because you can have $100,000 in student loans from, say, 2010, right? And it's been maintained perfect for 10 years. Do you know lenders will love you? They will love you because they look and say, wow, they've hit $100,000 and made sure it didn't go in default within a 10-year period. Matter of fact, I like them. Something else. So they don't necessarily look at the debt at that time. They look at actually being able to maintain it, over a period of time. So my recommendation a lot of times wouldn't be to consolidate student loans or whatever, because once you consolidate, that removes that prior history.
Oh, yes. Mm-hmm.
Yeah, so I would say as long as they're in good standings, you can leave it the way it is, because lenders love understanding. They love that you understand the principle of maintaining good standings with them.
Yes, that makes sense. Yeah, and we're coming, short on time, but I want you to give some closing remarks. We have about 2 minutes to go, and I just wanted you to, give us, first of all, start off with the telephone number and the website that they can reach you at, because I've heard some really good things about you, and the people who are referring people to you, I know and trust very deeply. So give that, and then give us like an overview of what should someone do to approach.
Okay. Mm-hmm. Well, first of all, our website is webuildyourcredit.com. Our number is 312-971-1357. And I'm just going to give you another note, just free information. We're starting we have a new YouTube channel, which is Next Level Credit and Funding. So you can go out to YouTube to Next Level Credit and Funding and subscribe, and you'll get a lot of information about things you can develop, and funding, whether credit cards, cars, real estate.
Okay.
But one of the final things I would like to say, just because you've had problems prior, there's still so much opportunity to continue to develop. That means starting back into society with credit, secured credit cards, secured loans, and those type of things. Whether you want to deal with the credit repair now or not, if you start that, no matter what age you are, what time it is, I could not convey the importance of that.
Well, thank you so much, Vincent.